Welcome to our complete guide on Indiana tax residency, where we demystify the crucial elements you need to know if you're considering residing in the Hoosier State. Establishing your tax residency is imperative because it dictates which state can impose taxes on your income. Misunderstanding these rules can significantly impact your financial responsibilities, making it essential for you to grasp Indiana's residency requirements well. This video will help you navigate through these complexities with clarity and confidence, ensuring you understand everything that goes into determining your residency status in Indiana. Understanding what qualifies you as a resident in Indiana for tax purposes is the first step. The Indiana Department of Revenue breaks this down into two categories: full-year residents and part-year residents. Full-year residents are those who meet the critical 183-day threshold, indicating they've spent sufficient time in Indiana, regardless of other homes they may have. On the other hand, part-year residents pay taxes on all income earned while residing in Indiana and any Indiana-sourced income during their time in other states, making it vital to keep track of your residency and earnings accordingly. A key concept to grasp when discussing tax residency in Indiana is the difference between domicile and residency. Your domicile is your permanent legal home, the place you always intend to return. You can only have one domicile at a time, but you can be a resident of multiple states for tax purposes. This means you could be liable for taxes in more than one location, leading to potential double taxation issues. By understanding where your domicile lies versus your residency, you can better plan your finances and avoid unnecessary complications. The 183-day rule is a fundamental piece of the puzzle when establishing tax residency in Indiana. If you spend over 183 days in the state during a tax year, you're automatically presumed to be an Indiana resident for tax purposes, regardless of where your permanent home is located. Keeping track of the days you spend here is crucial, as it helps ensure compliance with state regulations and tax laws. Utilizing digital tools and apps can assist you in monitoring your presence across various jurisdictions to avoid any pitfalls associated with residency requirements. Lastly, the rise of remote work has created new challenges in determining tax residency, particularly for those living in Indiana but working for an out-of-state employer. If you're an Indiana resident employed elsewhere, it can complicate your tax situation immensely. Similarly, if you live outside Indiana but have ties to an employer based in the state, understanding your tax obligations becomes even more critical. Staying informed about these evolving residency rules ensures you are prepared and compliant, especially as Indiana continues to adapt its tax regulations to fit the needs of its residents and non-residents alike.